Silver just broke back above 60, and Wall Street is quietly hoping you look at the wrong thing. If you own silver right now, or you have been circling it for months waiting for a sign, this is aimed straight at you. Because there is a version of this breakout that actually helps you, and there is a version that quietly traps you. And from where you are sitting, the two look exactly the same. Same green number on the screen, same excited headlines, completely different outcome for your savings. So here's what I am going to hand you by the end of the next few minutes. You will be able to tell the real breakout, the one that actually moves your net worth, apart from the decoy, the one the financial channels will happily point you toward. And you will know precisely which of two doors you are standing in front of with the money you spent a lifetime building. Because most people walk through the wrong one without ever knowing there were two. And there is one detail, buried inside something that happened just a few years ago, that explains this entire move and gives the whole game away. It is the single part Wall Street would least like you to connect. I am saving it for the last few minutes, because once you see it, you cannot unsee it, and you will never watch a silver breakout the same way again. Stay with me to the end, and it is yours. Because to understand what is really happening as silver punches back above 60, you have to go back to the last time an enormous crowd of ordinary people decided to beat Wall Street at its own game. They were right about almost everything. They were right that silver was cheap. They were right that the physical market was tight. They were right that the big players were exposed. And most of them still walked away with nothing but a lesson they never fully understood. I do not want that to be you. Go back with me a few years, to the winter of 2021. There is a man, an ordinary man, and I will call him Gary. Though he could be any one of 10 million people who did exactly what he did. Gary is in his late 50s. He has a retirement account he has been feeding for 30 years, a mortgage nearly paid off, and a growing, gnawing feeling that the dollars in that account are not going to stretch the way he was promised they would. And one evening, he sees it everywhere. The headlines, the message boards. A giant online crowd, millions strong, has decided to squeeze silver, to take the most manipulated, most suppressed metal on Earth and force it to the moon, and stick it to the Wall Street banks who have been sitting on the price for decades. And Gary, standing at his kitchen counter with his phone in his hand, feels something he has not felt about his money in years. He feels like he is early. He feels like he is part of something. He opens the brokerage app he already has, the one that took him about 4 taps to fund, and he buys the big silver fund, the ticker everybody was sharing. He does not drive to a coin shop. He does not wait for anything to ship. He taps a button. He owns silver, or so the screen tells him. And he goes to bed that night feeling like for once in his life, he is on the right side of the table. And for about a day, it worked. Silver jumped. The crowd roared. It looked, for one glorious morning, like the little guy was finally going to win. And then it just died. The price rolled over and bled out over the following days and weeks. And the squeeze that was supposed to break Wall Street quietly broke the crowd instead. Gary watched his position sag, felt like a fool, told himself he would never fall for the hype again, and eventually sold. And here is the part that matters, the part almost nobody stopped to ask. Why did it fail? These people were not wrong about silver. So why did the squeeze fizzle while the thing they believed in, the tightness, the shortage, the suppression, was all completely real? Hold Gary there at his counter. We are coming back to him, because the answer to that question is the whole video, and it is the detail I promised you at the top. Now let me show you what is actually happening right now, because the daily tick does not matter, and the shape of it does. Silver got taken out and shot not long ago. It was shaken down hard into the mid-50s, its lowest in the better part of a year, a fast and ugly flush that had every headline screaming that the silver story was finished. And then it turned. It has clawed its way back above 60 over several sessions, leading gold on the way up, recovering much of the drop. Gold, for its part, barely flinched next to that. It pulled back far less and has since rallied back over $4,100 to a multi-week high, calmly, without the drama. And because silver fell harder and bounced harder, the gold to silver ratio, which is simply how many ounces of silver it takes to buy a single ounce of gold, stretched into the 70s during the panic and has since eased back into the high 60s as silver outran gold. So that is the breakout everyone is pointing at. The number on the screen. Silver, back above 60. And it is real. And if you held through that shakeout instead of getting scared out of it, you have already recovered a good chunk of the damage. And you should feel steady about that. But here is where I need you to lean in, because this is the reveal, and it is hiding in plain sight. There is not one breakout happening right now. There are two, and they are not the same event. And Wall Street is desperately hoping you only ever notice the first one. The first breakout is the paper one. It is the price. It is the number that prints on the screen. set in the futures pits and the big funds and the electronic markets where fortunes change hands in milliseconds and no actual metal ever moves. That is the breakout the financial channels will show you because it is loud, it is easy to chart, and most importantly, it keeps your eyes exactly where they want them. The second breakout is the physical one. It is the metal itself, the real, heavy, refined bars, quietly and relentlessly leaving the vaults. And that one they will not put on your screen, because that one is the one that is actually bullish, and it is the one that threatens them. Let me show you the difference, because it is the most important thing you will hear today. The price of silver is set in a paper market, where claims on metal can be created almost out of thin air. A futures contract, a fund share, a promise, an IOU. When a wave of buyers shows up, the people running that machine can simply manufacture more paper claims to meet the demand, and the price barely moves. That is a market that can be sold and bought back and diluted in seconds. But the metal, the actual physical silver, cannot be conjured. It has to be dug out of the ground, refined, cast into bars, and shipped over years. You cannot tap a button and create an ounce of silver. And that gap between the paper you can print and the metal you cannot is the single most important fact in this entire market. Wall Street lives in that gap. It is where they make their money, and it is where they hope you never look. And right now, in the physical world they do not want you watching, something extraordinary is going on. China is draining the physical silver market. Its imports have surged to a record. Its domestic inventories have been pulled down so hard that at the stress point, silver inside China traded at a steep premium to the price in London, which is another way of saying the metal is being physically yanked toward the buyers who actually want to hold it. And this is not one strange month. Silver has run a structural deficit for 6 years running now, 6 straight years where the world used more silver than it mined, plugging the gap by draining hundreds of millions of ounces out of above-ground vaults that do not refill. Copper, silver's industrial cousin, is trading near record highs on the same electrification and data center demand that eats silver too. The physical market has been tightening, quietly, brutally, the entire time, straight through the paper flush into the mid-50s and straight through the bounce back above 60. The metal never cared what the screen said. And that is exactly why I have to stop for a moment and talk to you directly, because this is where a real decision quietly sits, especially if you are the person this channel is really for. If you are sitting on $100,000 or more in a retirement account, a 401k, an IRA, anything you spent a working life filling, then the difference between owning real metal and owning a paper claim on it is not an abstraction to you. It is the whole ballgame. It is the difference between Gary and the person standing next to him who did it differently. That is exactly why I put together a free retirement protection guide. It walks through, in plain English, how some retirees are moving a portion of their savings into physical gold and silver without triggering taxes or penalties, held inside the tax-advantaged account they already have. Real metal they actually own, instead of a number on a screen that somebody else controls. If you are watching this on your TV, just scan the QR code on your screen. If you are on your phone or your computer, go to jeffreedguide.com. And if you go through it and want to talk it over, there is a free, no-obligation, one-on-one educational session for folks with $100,000 or more in any retirement account. No pressure, nothing to buy, just answers. Now, let me get you back to that reveal, because we are almost at the part they really do not want you to have. So why does Wall Street want you in the paper breakout and not the physical one? Follow the money, because it is not complicated once you see it. When you hold a paper claim, they win no matter what. They collect the fees, they earn the spread, they lend the metal out from under you, and above all, they keep control of the exits. Your silver, the silver you think you own through a fund or a contract, is a number in their system, and the button that lets you turn it back into cash is a button they operate. But when you take physical delivery, when the metal actually leaves the vault and sits in your name in real allocated storage, you have stepped off their table entirely. You are no longer a source of fees. You are no longer a claim they can dilute. You are a person who removed a real bar from a shrinking pile, and there is nothing they can print to replace it. Multiply that by China, by the central banks buying gold at a record pace, by every quiet stacker who takes delivery instead of tapping a screen, and you understand their actual nightmare. It is not the price going up. They can handle the price. It is the metal running out. Now, here is the part that actually changes things, and almost nobody gets to it. So let me shift gears and be blunt with you. The reason the whole thing works, the reason they can afford to let the paper price break out above 60 and even cheer it on, is that they are betting you will do exactly what Gary did. They are betting that when you get excited about silver, you will reach for the easiest, fastest, most convenient version of it. The paper one, the one that takes 4 taps and no shipping. And the moment you do, you have handed the pressure right back to the very people you were trying to beat. Because remember the question we left hanging. Why did the Great Squeeze fail? Here is the answer, and it is the detail I promised you at the top. When that giant crowd tried to squeeze silver by piling into the big silver fund, they thought they were buying metal. They were not. They were buying shares in a paper structure, and the firms who run that structure are allowed to do one thing that ends every squeeze before it starts. When demand for the shares surges, they simply create more shares. They manufacture new paper to meet the buying, and that new paper has to be matched with metal sourced on their timeline, in their way, not yours. So the crowd pushed with everything they had against a door, and the door just widened. You cannot squeeze a market by buying the one instrument the House is allowed to print more of on demand. You were pushing on a door that opens outward, and the harder millions of people pushed, the more paper simply flowed to absorb them. That is why it fizzled. Not because silver was wrong. Because they walked through the wrong door. The paper door. The convenient one. The one Wall Street holds open for you with a smile, precisely because it leads nowhere. The people who actually made the metal market tighter in that whole episode were not the ones squeezing the fund. They were the quiet ones who took physical delivery, who bought real bars and real coins and had them put away, who removed actual metal from an actual shrinking pile and simply held it. They did not make headlines. They did not roar. And they are the ones who forced real strain into the physical system, the same strain you can see today in China draining the vaults and the premium opening up on real metal. The paper crowd got a lesson. The physical holders got the metal. So now you can see this breakout for what it really is. The paper price above 60 is the decoy, the loud one, the one they will show you. The metal leaving the vaults is the real one, the quiet one, the one they will not. And Wall Street hoped you would miss it, hoped you would get excited about the number and reach for the paper, because that is the version of a silver breakout that costs them nothing and can be diluted away by morning. Now, I have to be just as honest with you about the other side of this, because I am not here to sell you a number. I am here to help you keep what you built. I cannot promise you a price, and I cannot promise you a date, and the second anyone does either, you should close their video and never come back. Silver is the most violent major metal there is. You just watched it flush into the mid-50s and snap back above 60 in a matter of days. And it can turn around and do the ugly version just as fast. A few good days off the lows is not proof of anything. The bottom might not be in. Silver could round trip right back down below where it just broke out from before any of this deeper story ever pays off, because in the short run, the price answers not to the deficit and not to China, but to the Federal Reserve, which under Kevin Warsh has turned hawkish, with a rate hike still on the table instead of a cut, and metal that pays no interest always struggles when rates threaten to climb. The physical shortage is the trend. The Fed and the dollar are the weather, and the weather can soak you for a long, long time before the trend ever shows up on your doorstep. Yes, there are analysts who lay out cases for silver in the triple digits, based on that 6-year deficit and on the ratio compressing back toward levels it has actually visited before. And the math they run is real math, but it is a case, not a promise, and being right and being early feel exactly the same while you are white-knuckling a drawdown. Own only what you own, and size it so a further drop can never force your hand. So here is what to actually do with all of this. And it is not advice. It is just how a calm person thinks about their own position. First, and this is the whole lesson of the man at the kitchen counter, own the metal, not the promise. If the last few years taught you one thing, let it be that a claim you can create more of is not the same as a bar you cannot. Second, size it so a shakeout like the one you just witnessed cannot force you to sell. If a drop back into the mid-50s would put you in a position where you had to raise cash at the worst possible moment, then your position is too big, no matter how right the story is. Because being forced to sell in the valley is how right people still lose everything. And third, never sell into the shakeout. The shakeout is the machine that transfers metal from the people who feel to the people who own. Do not be Gary. Do not be the fuel. If you are watching on your TV, the QR code is on your screen one more time. If you're on your phone or your computer, go to jeffreedguide.com. It costs you nothing to be informed, and the honest reason to look now is not fake urgency. It is this simple truth. The time to think a decision like this through calmly, to understand the difference between the metal and the promise before you ever need it, is exactly when nothing feels urgent, which is right now, not the day everyone is panicking and reaching for the convenient door. And for those of you who stayed with me all the way to the end, here is something just for you. If you have $100,000 or more in any retirement account, and you mention that you watched this full video, you can claim a free one-on-one, no-obligation educational web conference. A real conversation about what you actually own versus what you only think you own. No pressure, nothing to buy. That is for the folks at that level who made it all the way here, and you are one of them. So could this video sit under some other title? No. You came to find out what the $60 breakout Wall Street hoped you would miss really was, and now you have it. It was never the price on the screen. That one they are glad to show you. The breakout they hoped you would miss is the metal itself, walking quietly out of the vaults and into the hands of people who took delivery. The physical door they never advertise, the one that actually leads somewhere. And Gary, standing at his kitchen counter, phone in his hand, feeling for one night like he had finally beaten them, he had the right instinct and the wrong door. He believed the true thing, and then he reached for the version of it that Wall Street prints on demand, and it slipped through his fingers like it was designed to. The breakout above 60 may hold, and it may not, and no one honest can tell you which. But the lesson underneath it is the only sure thing in this entire video. Do not just be right about silver. Own it in a form they cannot conjure, cannot dilute, and cannot take back. And make sure you are still standing to see it matter.